Hello, future investors, and those of you that have been doing it for a long time. We want to talk about fix and flip loans and the types of lenders that offer them. The first thing is, let's just get into the lenders. Your local bank, the traditional banks and lenders typically do not offer the type of fix and flip loans that you need to handle the project that you're working on. They want you to qualify by providing all of your income documentation and tax returns and all of that. And a fix and flip investor type loan is not what they specialize in. So there are other lenders who focus on this, who understand the process, who understand investors, who understand what it is to need to purchase, rehabilitate, and then quickly sell the home soon after. They're providing the mortgage programs that are best suited for what you're trying to do. So let's talk about what kind of down payment is needed. Until you're a very, very seasoned flipper, you're going to be looking at a 20% down payment on the purchase price. So let's say you're purchasing a property for $200,000. The 20% down will be $40,000 to put down. You should be able to borrow up to 75% of the after repair value, or ARV. So that is what the home will be worth after the rehab is done. So let's say when the rehab is completed, you've just turned this $200,000 home into a $400,000 home. That means that the maximum you can borrow to make all of this happen would be $300,000, because $300,000 is 75% of the after repair value of $400,000. So this is how you borrow the funds to be able to do these flips. Now the interest rates are going to be higher for these fix and flip loans because they are not geared towards holding on for a long time. You're not going to be sitting on it for a few years. You're not going to hold it. This is a loan that you get to get in, do the rehab. After a few months, you're done, and you either sell it or you convert it to a long-term hold loan, which at a better rate, something that once it's stabilized, you can rent it out and enjoy some nice cash flow after you've rehabbed the property. And if you're going to do that, it's often smart to stay with the same lender to do the long-term loan, the same lender that did your fix and flip loan, to do the permanent loan after the fact, because they're not going to have seasoning rules that they're going to impose on you. And what that is oftentimes a lender will not use the newly appraised value until 12 months after you've purchased a property. But you can circumvent that if you're using the same lender with the fix and flip loan that you would with the long-term hold loan after the fact. So there's a lot to talk through here about your project, and I've just kind of touched the surface as to what these loans are all about. And you can do as many of these as possible. The other thing is, once you become an experienced flipper and you're doing multiple flips per year, and a lender in our network gets comfortable with you, then you would be able to then come in potentially with a lower down payment than 20%, which is going to be a great thing for you and your cash flows. So if you'd like to speak with someone, want to run a scenario past us, want to get an idea as to what this will look like for you, then just visit nonprimelenders.com. I'm going to leave a link down below in the first pinned comment and also the description, where you can read more about this program and also get in touch with us. Thanks for watching, and I hope you're doing great.